This week, the Fed Reserve did something we haven't seen since last year. They cut interest rates for the first time, officially signaling the end of the most restrictive rate hike cycle in history. Now, why does that matter? Well, because mortgage rates dropped immediately to about 6.35%, and that's the lowest we've seen in nearly 12 months. And if history tells us anything, these windows don't always last. The last time rates dipped this low, within weeks they shot right back up to 7%. Now, to put that into perspective, if you purchased $1 million home with 30% down, your monthly payment at 7% would be about $46.57. At today's 6.35% rate, that same loan would drop to around $43.56, saving you over $300 every month. Now that's nearly $18,000 in the first 5 years alone, and more than $108,000 over the life of the loan. In other words, locking in even a slightly lower rate can mean real money back in your pocket. Here's the real takeaway. The Fed also hinted at up to 2 more cuts before the end of the year. Now, that means affordability is improving right now, and buyers are already jumping back in before competition heats up. In fact, I'm talking with clients who understand that even a half a point swing in rates can mean hundreds of dollars a month in savings, and they don't want to miss out. At the same time, the job market is cooling. Unemployment just ticked up to 4.3%, and that's exactly why the Fed made this move. So lowering buyer costs are designed to keep the economy moving, and housing is always one of the first places we see the impact. So let me ask you, has this news changed your timeline to sell or to buy? Because if you've been waiting for the right moment, this could be it. Sellers have the chance to get ahead of the spring rush, and buyers have the opportunity to lock in better affordability before demand surges again. If you're even considering a move, let's start planning now. Send me a message and we'll talk strategy before the rest of the market catches on. Thanks for watching. If you found this information helpful, be sure to subscribe for more insights just like these. I'm Monica Carr, and I'll see you next time.